Good morning, everybody. Thank you all for logging on and for joining us this morning. For those of you who don't know me, my name is Peter Davis. I'm one of the partners here at Moore Kingston Smith. And I'm joined this morning by one of my colleagues, our Director of Hospitality Payroll Services, Shana Tricale. In just a minute, I'll let Shana introduce herself to you. For those of you who, for whom haven't joined our webinars before, just a little bit of how we run. So there will be time at the end for questions. What you should find is, and it will either be at the top or the bottom of your screen, depending on whether you're in Zoom on a desktop or mobile, there is a chat bubble. If you click on that, you can type in any questions that you've got. And then we will try and run through just as many of those as we've got time for at the end as well with that. So with no further ado, I am now going to pass over to my colleague Shana. She's going to say a few words and introduce herself, tell you a bit about what we're going to be covering. And then we will delve into national minimum wage for salaried workers. Shana.
Good morning, everyone. Right. Thank you, Peter, for the introduction. So I'm the Hospitality Payroll Director at Moore Kingston Smith. I've been with the business for 4 years, leading a fantastic team of hospitality payroll specialists. Our team focuses on delivering a high-end, fully outsourced payroll and payroll advisory services for the hospitality sector. Just a few words about myself. I've been in payroll for the last 20 years. And before joining Moore Kingston Smith, I've managed in-house operations for large organizations such as Aviva, Arsenal Football Club, and PayPoint, giving me a wealth of experience from both an internal and external perspective. I'm also a fellow of Chartered Institute of Payroll Professionals, reflecting my commitment to high standards and excellence in the payroll profession. So as Peter already mentioned, the presentation will take around an hour, and then we will follow by any questions you may have. So for some reason, okay. So what is on the agenda for today? So we're going to cover several key areas. So an overview of different worker types under national minimum wage rules, the conditions that must be met for an employee to be performing salaried hours work, how to calculate national minimum wage for salaried workers, additional pay points that needs to be considered, calculation year and its adjustment, a brief overview of unmeasured work, average daily agreement, deductions that can reduce an employee's national minimum wage pay, record-keeping requirements, and finally, we will finish with a summary of everything we have discussed.
I think it might just be worth, one of the reasons that we're focusing particularly on salaried workers this morning is because this is a real hot topic for Revenue and Customs. It's something that they are specifically targeting businesses for, and we'll come on to the detail of that later. And of course, as you all know, or all should know, later on this year, enforcement of the minimum wage will pass over to the Fair Work Agency. This is also high up on their agenda as well. So I think this is something that's very topical. And with the knowledge that I've got and Shana has got of the hospitality sector, it's an issue that we find happens again and again as well. Sorry, Shana. Oh.
Yes, before we begin, we would like to get a sense of how confident you currently feel about calculating the national minimum wage for salaried workers. So we've prepared a poll. You will have 4 answers that you can select from. Just to let you know, the poll is completely anonymous and your answers are not recorded, so please feel to select the appropriate option.
That's quite an interesting split that we've got there.
Yeah.
No, I think it shows the majority of people feel that they are somewhat confident, which is good. I mean, that suggests that there is a level of awareness there. And hopefully, as we go on this morning, we'll discover whether that awareness is accurate, comprehensive as well on that. Thankfully, nobody has said wasn't aware at all. Good, that's great. So everyone's got a certain knowledge level on that. Okay.
I think we'll give it a few seconds. We've got 73% participated.
Should we move on to the next, the second question?
I think so. Yes, I think we've got a good idea and good feel about the room. So the next poll, I think we need to stop this one.
Yep.
How do you maintain time records for your salaried workers? So again, we've got 4 options.
Okay, there's a pretty good there's a pretty good split across all the different answers there with that as well. So we've got round about a third of people keep detailed records of all work time, including breaks. We've got around a quarter where we've got rota showing who's working for individual shifts. We've got just under 40% with records of the start time and the finish time, and about 10% where salaried workers aren't completing records, but obviously they're trusted to work their hours as well. Okay,
Brilliant.
well, that's a good
I
split.
think we will move on. So let's look into the types of works. There are 4 types under the national minimum wage legislation. So we've got timed work that is frequently used, and employees are paid for the actual hours they work. We've got salaried hours work. This is where employees are paid an annual salary in return, under the contract of employment, for a set number of basic hours each year. We've got output work, which is less frequently used and is paid, employees are paid based on the number of items they've completed or tasks they've completed. And unmeasured work, this is where none of the other categories apply. So today we're not going to talk about output work or time work. We will purely focus on salaried hours work, and we will also touch on unmeasured work as well. So depending on the type of work your employees perform, the calculation that you need to carry out for the national minimum wage checks will differ. This is where we often see misunderstandings because the national minimum wage is actually not just a pay rate, it is a calculation, and we will talk you through this in a minute. So looking at the salaried hours work, so according to the national minimum wage regulations 2015, section 21, so the salaried hours work, they are employees who are paid for a set basic hours each year as per the employment contract. So they are entitled to a basic salary in return of these hours. They're not entitled to any other pay for the basic hours except for the performance bonuses or salary premiums. Just to touch on the performance bonuses, when we're talking about performance bonuses, we're referring to a bonus that is attributed to an individual performance based on their individual work they have personally delivered rather than a performance of the company in general. So another point, they are paid in equal installments, which are monthly, weekly, 2-weekly, or 4-weekly. Or alternatively, they can be paid in monthly installments that vary, but they would add up to the same amount each quarter.
But that might accommodate, for example, a 4-4-5 pay cycle.
Yeah.
And I think the only other thing I think is key is to be a salaried worker, you have to meet all of these conditions. It's not one or more of them, it's all or nothing.
Yeah. So, okay, so we obviously mentioned set basic hours. So what do we mean by that? So this means that the weekly or monthly working hours must be stated in the employment contract. So for example, 45 hours per week. You don't need to be, they don't need to be annualized. You don't need to display the annualized hours, as long as you can clearly demonstrate how you've calculated the annualized hours. We know that there are not 52 weeks in a year, do we? But I think we often see it, mistakes coming, from this assumption. So how many weeks a year are there? So let's disclose that. So in a standard year, we've got 52.14 weeks. And in a leap year, we've got 52.3 weeks rounded up. Okay.
You may think that's really, really pedantic. Yeah. We're going down to decimal points, but I'll give you an example. So a number of years ago, John Lewis, so very reputable, very well-known business, a business that puts a great store on treating its partners, as they call them, well and treating them correctly. John Lewis ran into a problem with Revenue and Customs over this because they weren't factoring those fractions in. And what Revenue and Customs said is, okay, well, actually, you've not expressed things correctly in the contract, and you're not taking account of the decimal point here. And John Lewis said, okay, very sorry, didn't realise, but okay, how bad can it be? We may have not paid our worker for 0.14 of a week. Well, okay, we'll pay him for that 0.14 and then we're okay, aren't we? And Revenue and Customs answer was, well, no, it's not as simple as that, because these workers are now not salaried because you've not fulfilled the conditions. And that means that they are unmeasured workers. And as we're going to see a little bit later on, John Lewis also hadn't fulfilled the conditions of being an unmeasured worker. And so what that meant was that all of the workers should have been paid for the hours they had worked in a particular month. Now, obviously, John Lewis is a very seasonal business. And what that means is at some times of the year, people may actually come in under their normal standard hours when business is quieter. But at other times of year, sale, run up to Christmas, they're very busy and staff work longer hours. And the problem is, as an unmeasured worker, in those periods where you have to pay people for all the hours they actually work and they've worked more, these workers were underpaid. Now, although John Lewis isn't a PLC, they report as if they were, and they publish their financial information like PLCs do. This issue ended up costing John Lewis £36 million, and that's in the public domain. They're not our clients. And what it goes to show is it all started because they made a couple of very small and very basic mistakes when it came to this. So don't think this is a really, really pedantic point. Why do we need to worry about that? Because the answer is Revenue and Customs absolutely do worry about it.
Yeah. And obviously, you do need to worry about this when you are writing your employment contracts, but also when you're performing minimum wage checks. So we've provided you with an example of an employment contract for a salaried worker, and it may look something like this. Your basic salary will be £55,000 per annum based on 2,510.4 basic annual hours, and this is based on a full-time working week. Overtime is not payable for this position unless an additional payment from the company is required to satisfy your entitlement under the national minimum wage regulations. And in terms of this additional payment, this is something what we will be looking into more detail right now. So let's move on to the minimum wage calculations for salaried workers. So the first step for us is to complete checks on the pay reference period or PIP check. So let's just to look what pay reference period is. For salaried worker, it cannot exceed 1 month and must be at least 1 week. PRP can be aligned with the calendar months, i.e. from the first till the last day of the month, or it can run on a set monthly cycle, like in our example from the 20th till the 19th of the following months. So let's assume we have a manager working at a restaurant. They're 25 years old, so they would be entitled to a national minimum wage of £12.21 for the current tax year. The contract of employment states that the weekly contracted hours, 45 hours per week. So from here, we can work out annualized hours by multiplying weekly hours by 52.3. And from annualized hours, we can also work out monthly contracted hours by dividing the annual hours by 12. So the employee is being paid £34,000 a year or £2,233.33 a month. They're also participating in a trunk scheme, so they receive a trunk element as well. But as we know, for minimum wage purposes, trunk must be excluded. So with this information in mind, we can actually perform national minimum wage check for the pay reference period. So what we need to do is consider all pay elements that can take workers' pay below minimum wage in that pay reference period, in that month. So it would be things like salary sacrifice, could be pension, could be cycle to work, any pay elements that can't be included in a calculation, and the deductions that can reduce national minimum wage pay as well. So for the purpose of this exercise, let's just assume that there is just salary element. So we just need to divide monthly salary by monthly contracted hours, and we receive the hourly rate of £14.45, which is above the national minimum wage rate of £12.21. So at this stage, we can say that we are satisfied with the PRP check. And if an employee doesn't work any overtime in excess, in addition to the monthly contracted hours, we can stop here and no further calculations or checks would be required. But our example, we've got an employee, a manager who works in a restaurant, and we know in hospitality business reality looks slightly different. So we have noted that the employee has been working additional hours each month. And we know that this is expected for his role, and his employment contract clearly states that there may be some additional hours in addition each month to fulfill his managerial duties. And the employee has also signed his employment contract agreeing to these terms. And we've done our checks. We can see that the employee is being paid above national minimum wage. So many of us may think that there is nothing to worry about here, and how many of you may say so as well, may think the same. But this is actually wrong, and here is why. So if we are aware that the employer has been working some overtime, we need to move to the next step in our national minimum wage checks. So the next step would be excess hours check. So this is where we need to have a look at the records of employees' actual hours worked, not the contracted hours. We're talking about the actual hours worked. That's why we were talking about the importance of having the record of worked hours. Then we need to identify, then if you have a look at the column cumulative worked hours to date, we've got all of the hours that employee has been working since he joined in January. And we can see that by November, the employee has actually reached his annual contracted hours. So
And I think again, just a key thing there. Now, contracted hours is what we use when doing our basic check, but then we have to actually understand what are the actual worked hours. And it's extremely important we know not just what's in the contract, but what the reality is, because compliance with the minimum wage is all about actual hours, what really happens. And in this example here, all that's happened is the employee has worked 1 extra hour a day, which, as I'm sure many of you will realise, that stuff happens all the time. We're just busy. They've got to get things finished. And people working modest amounts of additional time, but it all builds up. And as Shana's shown here, the key thing that you have to be alive to is at what point do the cumulative worked hours exceed the basic annual hours.
Okay. And in our example, we established that this happened in November, meaning that we need to move on to the next step of our checks. And it's step 3, calculating adjusted working time. So first of all, we will have to identify exactly on what date the access has happened. So let's say on the 15th of November. Then we need to identify the actual number of hours worked in November after the basic hours were exceeded. So 44.5 hours. So now we are ready to perform the working time adjustment calculation. So it's broken down into 3 stages. First of all, we need to work out the apportionment of time before the breach. So by using the formula, annualized hours multiplied by the number of calendar days before the breach. We know that we had 14 days before the breach, divided by 365. So we get a result of 90.27 hours. And then we need to repeat the same process to work out the apportionment of time after the breach by using the same formula, but multiplied by the number of calendar days after the breach. So we know it's happened in November. There are 30 days in November, 14 days were before the breach, so 16 days remaining. So we've got the result of 103.17. So, and now we can work out adjusted time for national minimum wage purposes. It's the sum of the apportionment of time before and after the breach, plus the access hours that have been worked in November. So we've got 237.94 hours. And now we are ready to perform our check for November. So monthly salary divided by 237.94, which is the adjusted time for national minimum wage, and it brings us to the hourly rate of 11.91, which is below the national minimum wage.
And I think you might look at this and think, oh my God, that's really complicated. And it is. And you might look at that and think, that's not logical. And it's not. I can't tell you what the logic is behind it, and nobody else has ever been able to tell me what the logic is behind it. And you might think there's surely a much easier way to establish whether we've reached the minimum wage in this month or not. Don't be tempted. And the reason I say that is it doesn't matter how complicated and how illogical it may be. This calculation is explicitly set out in the legislation, Reg 28, subsection 2, if you're interested. And it says you must perform this precise calculation. And any shortcut isn't going to wash with Revenue and Customs. They will religiously follow this calculation. They will insist that you do. And anything that might be a little bit simpler, more straightforward, or seemingly make more sense, they're not going to accept it. So regardless of the complexity, this is the way it has to be done because it's explicitly laid out like this within the legislation.
Okay, so to ensure that our employees not being underpaid, we need to adjust their pay. So in November, adjusted working time, we've got this figure. We need to multiply it by national minimum wage, 12.21, and this is how much the employee is due to be paid for November, 2976.07. We know that they are already receiving the monthly salary, so meaning that the additional payment of 14274 needs to be processed as well. What will happen in December? All of the time that the employee will work in December will be classed as excess hours. So they are still entitled to the monthly proportion salary, 112, but all of the hours that they will work must be paid at least at national minimum wage. So meaning that the employee needs to receive an additional payment of 2661.78. What will it look like in a year? So you can see that the additional payments are highlighted in red.
I think the key thing there to emphasize is that the employee's salary is only in respect of 2,353.4 hours. They've gone through those by the 15th of November. All of the hours they work after that are outside of that salary, even though you haven't yet paid them their full year's salary, because they're going to get some of that in December. But the salary they're getting in December essentially is in respect of hours that they worked up to the 15th of November, which is why there is such a big underpayment showing in December. All of those hours are excess and all of them have to be paid for.
Yeah, and failure in making these additional payments would obviously result in national minimum wage breach. So in our case, if we don't make these additional payments to the employee, the underpayment would be just under £2,800. So what does it mean in terms of the sanctions? If the underpayment has occurred, so obviously the underpayment for one employee is £2,800, the underpayment would be backdated for up to 6 years and multiplied by 5 to include the additional 5 managers that also work at the restaurant. So penalty of 200% and the total cost to the employer just under £250,000. And just so you're aware, once the HMRC issues the investigation letter, this is when the investigation is considered formally launched, not when they start interviewing your staff or when you provide them with the payroll data. It's when you receive that letter. Any confirmed arrears will be subject to a 200% penalty. The business will be included on the HMRC's name and shame list for non-compliance. So it is essential to take actions now and review your records for the last 6 years. And yeah,
sorry,
go on,
John.
Peter.
Yeah.
No, I just wanted to give a good news, obviously, about the opportunity, but go on, you can cover that bit.
Just on the penalty bit first. I mean, unlike investigations that Revenue and Customs carry out into tax issues, so if you have a tax investigation and Revenue and Customs find things wrong, the level of penalty is going to be dictated by a number of different factors, including whether this is something that was accidental, whether you've taken reasonable care, whether it was something that was deliberate or you tried to conceal it. It will also take into account your level of cooperation during the investigation as well. And sometimes penalties can be suspended. So the penalty, you won't have to pay it so long as you don't repeat any errors within the next year or two. That doesn't apply to minimum wage penalties. The level of penalty is fixed. It makes no difference if it was an innocent error or otherwise. It makes no difference how well you cooperate with that investigation. Once an investigation has started, if there are arrears, and those arrears are more than £500, then you are going to have that penalty, and it is at that rate. It's not like a tax inquiry. Sorry, Shana. Go on.
No, I just also wanted to mention that currently HMRC is offering businesses the opportunity to self-correct any underpayments. This allows you to disclose any issues voluntarily without incurring penalties or being included on a public name and shame list as well.
Yeah, and with the move from Revenue and Customs enforcing the minimum wage over to the Fair Work Agency enforcing the minimum wage this year, I mean, essentially, what seems to be happening is that Revenue and Customs have a significant backlog of businesses where they've not yet launched investigations. And I think they're trying to give the Fair Work Agency something other than a hospital pass here. So at the moment, Revenue and Customs are writing to businesses and saying, you should review your records. If you believe there is anything wrong, you should self-correct that and tell us about it and pay your workers. And if you do that, then we will not penalise you and we will not name and shame you. If you are contacted by Revenue and Customs offering self-correction, you should bite their hands off for it. You should review things, get external help. We can help with that as well. If there are any issues, get them dealt with now, because self-correction is a really, really valuable offering that Revenue and Customs are making. And we expect the Fair Work Agency to start off by taking a much harder line. We know that there is a political steer. The government want the Fair Work Agency to be taken seriously, and we want them to have a bit of an impact. And so they are not going to be as accommodating here. So I think there is a window of opportunity now for businesses. If, with the benefit of hindsight, there are any minimum wage issues, this is an opportunity to get them sorted without penalties and naming and shaming. We don't expect that opportunity to reoccur, or not in the short term, once the Fair Work Agency take over.
And they take over from the 7th of April this year. So when you're performing your calculations, there are a few points that you also need to consider, such as absences. So if employees who were absent in a period, but they receive full contractual pay, their working time for the pay reference period is not adjusted. So what kind of absences I'm talking about? Like annual leave or paid sick leave or paid lunch breaks. It's treated differently if employee is on unpaid leave. It could be any unpaid leave or statutory absences. So when you're performing PRP checks, the unpaid time needs to be removed from the contracted hours, but not the basic contractual hours for the calculation year. So for example, you have an employee who is going on maternity leave. Their contracted hours needs to remain unchanged. So it doesn't go to zero. You would use the monthly contracted hours. This remains unchanged for the purpose of calculating access for the holiday year, for the hours, access hours for the year, for the calculation year. So let's say they've completed some extra time, some overtime before they went maternity. That way you will be able to capture these additional hours. Okay, over to you, Peter.
So in the example that Shana showed you earlier on, we were looking at a pay year. And in that example, we used a pretty simple one, which was 1st of January to 31st of December. In reality, it's not as simple and not as straightforward as that, because under the minimum wage legislation, an individual employee's pay year is linked to the date that they started employment with you. So, for example, if I start work with a business on the 7th of August, my pay year will be the 7th of August of one year to the 6th of August the next year. My colleague may have joined the business on the 15th of November, and their pay year will be from the 15th of November to the 14th of the following November as well. So the standard default is your pay year that you have to perform these checks over. Remember the cumulative hours worked. Yeah. That is an individual pay year, and that means that in every pay period, you're going to have to be running lots and lots of different calculations. Now, that's quite administratively burdensome. What a business can do is to change the calculation year to bring everybody into line. So, for example, we might say that we want to change our pay year so it runs from 1st of April to 31st of March for every worker, or 1st of January to 31st of December. Now, if we're going to do that, then we have to do that in a formal way. We have to write to our employees at least 3 months in advance and tell them that we're going to do that and why we're going to do it. And assuming that the worker doesn't object, then we can apply the change. But a worker can object to that and say, no, I want my pay year to remain linked to the anniversary of my start day. And if the worker insists on that, you have to follow that. Okay. You can only make a change once every 6 years, so you can't keep chopping and changing with that. And also what you cannot do is make any additional deductions from pay, charge the employee any money, or make the employee work any extra hours because of that change. Okay. If you are a new starter and you're within your first 3 months, then you can make the change, you can impose the change, and you don't need to give that worker advance notice and the worker can't object to it, but that will only be if it's within their first 3 months of starting employment with you. Okay, so just before we get to that, have we gone on slightly too far then, Charlotte? No? Okay, so before we do that, what we need to have a think about is there are pros and cons to having different pay years or having all of your workers on the same pay year. Now, the advantage of having everybody on the same pay year is for you, it will be simpler, it will be more straightforward, everyone's dealt with in the same way, there is less administration to doing it. However, there are some downsides to it as well. And I think the first thing that you need to think of is to say, okay, do we expect that some, most, all of our workers are going to be working excess hours? So in other words, hours above and beyond the basic annual hours set out in the contract. And if you think that lots and lots of workers are going to be in that situation, that might give you a problem if you make everyone's pay year coincide. And the reason for that is that you could then have a situation whereby to avoid people breaching their annual basic hours, you need everyone to take time off in lieu at the same time. And operationally, that might just not be possible. Or it might be that time off in lieu just doesn't happen. And okay, we've now got to pay our workers for their excess hours, as Shana showed you earlier. And of course, what that will mean if everyone's pay year is aligned is that all of the excess payments will hit at the same time, probably in the last month or two of the aligned pay year. So that could be a cash flow issue that means that you've got quite a lot of extra money to pay out at the same point in time. Whereas clearly, if all of your workers continue to have pay years linked to their start date, they'll all go over their annual basic hours at different points in the year, which mean the payments that you need to make will be spread out over the year as well. So it's something to consider, but there are pros and cons to it. Sorry, let's move on, Sean. Okay. So, as we said earlier, in order to benefit from the salaried hours treatment, we have to meet all of those conditions that were set out at the start here. Okay. If we don't meet one or more of those conditions, so for example, if the worker gets a bonus that is not wholly based on their own personal performance, for example, then they cannot be a salaried worker. And really important to note here that just because somebody may be a salaried worker for employment law purposes, and you may think of them as salaried because we tell them an annual amount and we pay it to them in equal instalments, that does not make them a salaried worker for the minimum wage. Okay. Minimum wage and the Employment Rights Act are two distant cousins that have never met and just send each other Christmas cards once a year. They are not linked. So, we showed you earlier the different types of categories of worker that we've got. And unmeasured is basically the one at the bottom. It's the bucket that says, if you don't meet any of the others, then you fall into this one. Okay. So you cannot say, I want to be unmeasured. You are unmeasured if you are not time-based, salaried, piece-based, then you are unmeasured. Okay. And it can include people where there are no specific hours and times of when work is going to be undertaken. And that's probably the most common type of unmeasured worker that we have. Okay. Charlotte? Okay. Some examples here of different types of wording in employment contracts. Okay. But the key point is it is impossible to ascertain from the contract the actual number of hours that somebody is going to work. So, for example, in the first example, what we've got is we've got an average, but it says you're going to have to work more than that average. Okay, so we're telling somebody what the normal working pattern is likely to be, but we're saying, in addition to that, there's going to be more, and we're not telling you here how much more that will be. You may get contracts that set out a minimum number of hours. So, for example, you will work a 30-hour week, but more hours as required. Okay, so that's saying to the employee, there is a floor, you won't work less than that, but there's no ceiling on that. So you could work 31 hours or 51 hours. There may be a ceiling on there, but no floor. So it says you may work up to 48 hours a week. For example, somebody who hasn't signed the opt-out from the Working Time Directive, or where you don't want them to go beyond 48 hours a week. But that could mean that they work 48, 38, 28. Okay. The contract isn't telling us how many they will work. It is just saying that you won't work more than. Or it may literally be there are no numbers in the contract at all. You will work the hours as required to perform your duties according to the needs of the business. Yeah. So all of these are examples of contracts where it's not possible to work out what are the basic annual hours that this person is going to work, and that would then be unmeasured. Okay. Okay. Now, when we have an unmeasured worker, there are two ways that we can then deal with them. One of which is to accurately record every hour that person works, and that will be, for example, by a proper time and attendance system that is used by these people. And the second is what I call the unicorn solution, which is to agree to a daily average of hours worked. And you might say, why do you call that a unicorn, Peter? And the answer is because it exists in theory, but I've never actually seen one in reality as well. So let's have a look at that. Okay, so under the legislation, where we have an unmeasured worker, we are able to come to what we call a daily average agreement. And the legislation sets out in detail exactly how that has to work. And again, we can't deviate from it, because if we do, Revenue and Customs will say that is not valid. You have not followed the legislation. It doesn't count. So a daily average agreement is a written agreement between you and your workers. And it will set out what is the average number of hours that the worker is likely to spend each day doing that work, as long as they are available to work. Okay. So in the daily average agreement, we have to set it out. The daily average agreement, the written agreement, has to be put in place before the pay reference period that we're going to apply it to. So what we can't do is create one after the event. Yeah. Or maybe when Revenue and Customs come knocking, we quickly say to our worker, right, can you just sign this, please? Yeah. It has to be in place before the start of the pay period or pay periods that it's going to apply to. Right? So it has to set out this information, and the onus will be on you to prove that the average number is realistic. So we can't just say, let's call it 5 hours a day, when in reality, we all know it's 8 or 9 hours a day. Yeah. So again, Revenue and Customs may say, okay, you've come up with this figure for this daily average agreement. You need to prove to us how you satisfied yourself that that was a realistic average. And what won't work is to say, well, our worker agreed to it, so it must be correct. Revenue and Customs will scratch their chin and say, yeah, balance of power between the two of you, that worker's going to sign whatever you put in front of them. So you've got to be able to prove that that average is realistic. And what that means is that, you need to keep it under review. Every few months, you need to look at it again and say, well, okay, it was realistic 6 months ago. Is it still realistic now? Let's move on, Sharon. Okay. Sorry, just before we dive into this, if we don't have or choose not to have a daily average agreement, then an unmeasured worker must be paid each pay period for all of the hours that they have actually worked in that pay period. Essentially, they become a time worker. Okay. And again, that means we have to know, okay, even though we may not have known in advance, and even though we may not have told that worker in their contract what they were going to work, again, come back to something I said earlier, reality is king here. We need to know what actually did happen in the pay period. And if we don't have proper time records, we are leaving ourselves wide open to Revenue and Customs saying, you can't prove what your workers did and didn't work. You can't prove that daily average. Yeah. And the problem with the minimum wage legislation is the burden of proof is on you. It is for you to prove the hours that your employees have worked and that you have paid them at least the minimum wage for those hours. It's not for Revenue and Customs to prove that you haven't, or the Fair Work Agency in future. It's not for an employee to prove that you've underpaid them. The onus is always on you to prove, I have paid. And if you can't do that, you're in a very exposed position with that. Okay. Let's briefly take a look at deductions from pay, and Shana mentioned that briefly earlier. So first of all, we take the salary that we are going to pay to our worker, and then there are deductions that may be made from that. Now, some deductions are allowable, deducting tax, NI, pension contributions, with one exception. Things like that. Those are deductions you can. But then we have to look and say, okay, deductions that reduce minimum wage pay, that reduce the amount of money that you use in the calculation. So salary exchange or salary sacrifice, and that includes if an employee is paying their pension contributions through salary exchange. You can't salary exchange your pay below the rate of the minimum wage. Even if that is consensual, you cannot do it. So the main two salary exchange things that we see now are pensions and cycle to work, but you can't do it for minimum wage. Deductions for things that people are using as a part of their job, so uniform and clothing, protective equipment, tools and equipment, so that might be in the kitchen, chef's knives and things like that. Some businesses have operated savings schemes in the past where an employee has said, well, look, you can keep some of my money, we'll save it up, maybe you pay me some interest and I get the money back at Christmas, there we go. Okay. If that money is being held by you, then it will not work. It will reduce pay for minimum wage purposes. And Iceland, the high street supermarket, they got in a lot of trouble with Revenue and Customs over the Christmas savings scheme. Deductions for employer transport. Now, in London, that's not going to be very common. If you are an operator out in the wilds in a more remote location, you may well provide transport for your staff to get from the nearest town where they live to your hotel, which is in the middle of the beautiful countryside, but there ain't no public transport there as well. Deductions for goods and services. So an employee might say, can I buy a bottle of spirits from you at cost, just taking out my pay? Yeah. Providing meals to people. Yeah. So you cannot charge your employees for staff meals and recover that deduction through the payroll. That will reduce pay for minimum wage purposes. Deposits as well. So deposits, you might often see, I'm going to give you a locker key, I'm going to give you a swipe card, I'm going to give you a uniform, I'll take a deposit from you, and if you give it back to me in good condition, I'll give you the money back. You can't take a deposit from somebody under the minimum wage regs. Now, it's irrelevant whether these deductions come from gross pay or net pay. Yeah, doesn't matter. It's irrelevant if the employee agrees to it, asks for it, wants it, is getting something of value back in return for it, doesn't count. Okay. Advances, if you advance some pay to somebody and then recover that, that is not a deduction. You've not reduced their pay, you've just given a little bit of it to them early and in advance. Okay. Loan repayments. So an employee might come to you and say, can I borrow some money? And you might agree a loan with somebody. Okay. That will be okay, provided that the loan is not for work-related expenses like buying a uniform, buying equipment, things like that, or it's not a compulsory loan that the worker is obliged to take out. Okay. So somebody might come to you and say, my fridge at home has blown up, or my car needs some repairs. Can I have a loan from you? Or you might offer somebody a season ticket loan, to spread the cost of them, getting a season ticket to get into work. Okay, that will be allowable, but always make sure you've got a proper written record of it to show exactly what it was and what it was for. Okay. You might say to somebody, okay, we're going to provide you with some uniform, and when you leave, you have to give it back to us in reasonable condition. There's no more than reasonable wear and tear on it. And the employee might fail to give you the uniform back when they leave. You would be allowed to make a deduction in respect of that in their final pay packet. And the reason for that is that the employee has breached their contract with you. Their contract or their written agreement with you said, I will give this back to you. But you need to make sure that it's in the contract or other written agreement that says, if you don't do this, we will make a deduction. And that deduction has to be reasonable for what it's designed to cover. Okay, so if somebody doesn't give you an apron back, you can't withhold all £2,000 of their last payment. Okay. Now, there is one deduction that you can make that reduces pay below the national minimum wage, and that is if you provide living accommodation to your staff. So you are legitimately allowed to make a deduction, or you are legitimately allowed to pay your employee below the national minimum wage if you are providing them with accommodation. But, and this is important, there is a rate that is set, and it's set every year by Parliament. Okay, so currently it's £10.66 a day, and that is going up to £11.10 from the 1st of April this year. Now, you might say, I can't live in a dustbin in London for £10.66 a day. Yeah, that rate is not designed to be a commercial market rate for accommodation. Yeah, it's not meant to be, and it isn't, clearly, as well. But all that is that is saying that is an amount that you are legitimately allowed to charge your staff or deduct or pay below the minimum wage. But for example, if you charge your employee more than that in rent, if you charge your employee the equivalent of £20 a day in rent to live in staff accommodation, that you can pay them £10.66 below the minimum wage, but the other £9.34, that would be a deduction that would reduce pay for minimum wage purposes. So accommodation, there is some tolerance, but it's not a full market rate of tolerance. Let's move on. Okay. We've said this a few times. Those of you who speak to me regularly will know I keep banging on about record keeping. That's because it is really, really important. Now, what the legislation does not do is it does not specify exactly what records you have to keep, how you have to keep them, or what they have to comprise. What it says is they must be sufficient to demonstrate that you have paid your worker at a rate of at least the national minimum wage for all of the hours that they were entitled to have that in respect of. These are examples here on this slide of the types of records that we would say should be kept in order to show that. Okay, but the legislation doesn't specify, it just says you must keep sufficient records. And as I said earlier on, the burden of proof is on you. It's not on the employee to say, I've got to prove that you've underpaid me. It's always on you to prove you've always paid people at least that rate. Okay, let's move on, Shannon.
Yes, we've reached the final poll.
So this is taking into account everything we've talked about in the last hour. Do we now think all of your salaried workers are paid correctly? Some of them, you're not actually sure any of them are. And if you're still very confused and don't know, that's okay. That's fine. But, in that situation, I would suggest that, it will probably be good for Shana or one of her colleagues to have a chat with you offline here as well. Okay. Okay, so, again, I think what this poll is showing again is we've got almost a fifth who saying, I'm not sure any of my workers are categorised and paid correctly. And then we've got a large number with, I think some of them are as well. So, that doesn't surprise me, actually. I think this is something that, when I'm talking to businesses, I know it's the case for Shana as well, time and again, what we find is people saying, yeah, my workers are salaried. I pay them a salary. It's £40,000 a year. So they must be paid the minimum wage, right? And the answer is not necessarily, because unless you are going through those calculation steps that Shana set out earlier, the answer is they may not. And we all know, all of us here, we're in a safe space this morning, all of us know that it is very, very common for our management teams to work additional hours. We also know that time off in lieu is very often a theory rather than a reality, because there are times when we are busier and people accrue that time off in lieu, but there's often not time when we're so quiet that they can afford to take that time back. Okay, so excess hours are very, very common. This is something that revenue and customs are actively focusing on, not just in hospitality, to be fair, with that, but they will know that hospitality is a sector where it is very much the norm that people work beyond their contracted hours as well. And if we just flip onto the summary, Shana. Okay. I think key messages here. So the fact that you might pay somebody something that you call a salary, and you might write down in the contract, this is your salary. That does not mean for minimum wage purposes, they are a salaried worker. The minimum wage regulations sit in a vacuum completely separate to the Employment Rights Act. Okay. You are only a salaried worker if you have basic annual hours, and the salary that you are paid is only in respect of those basic annual hours. And what you can't do is to stretch it to say, well, you've worked more hours, and so what we'll do is to calculate your total worked hours by your salary, and oh, look, you're still over the minimum wage. Because once you get beyond those basic annual hours, they are excess hours. Okay. And essentially, there are three things that you have to do. One, operate a proper time off in lieu system where it is properly recorded and people genuinely take that time. Second, pay people as they go. You've worked some excess hours this month. I am going to pay you for it. Okay. Unless you're very, very sure that later on in the year, they will undershoot their normal hours. So that by the time we get to the end of their pay year, they won't have, their cumulative worked hours will not have exceeded their basic annual hours. We need to do these checks regularly. We need to do these checks, for example, also when people leave employment. So if a salaried worker leaves employment partway through the pay year, you need to do a check at that point to make sure, okay, have we actually paid that person correctly? Because if somebody has worked for you during the busier time of year and has left before the quieter time of year, they may well have exceeded their basic annual hours prorated down. And the calculation has to be done in that very complex way that we set out earlier. Okay. So although the Fair Work Agency takes over in just over 10 days' time, the first couple of months is going to be them getting themselves organised, them, getting their systems and everything in place, getting their people in place. So we expect that there's probably a time window of a couple of months where this will still be dealt with by Revenue and Customs. And that is the time window, I think, where if businesses look and say, yeah, all right, look, we thought we were doing the right thing. With hindsight, we realised that we weren't. Let's get this dealt with now. And that will be in a way without a penalty and without a naming and shaming. And the final thing I would say is people often say to me again, who's ever going to know about this? We get on with our workers fine. They're all very happy. Yeah, what's the problem? What are the chances Revenue and Customs are going to investigate me? And the answer is not necessarily high, but it's not zero either. And hospitality is unfortunately a sector that Revenue and Customs believe there is a lot of underpayment of minimum wage. And there's a reasonable chance that you may fall out with a worker, and a worker may leave you on bad terms, and everything may be very amicable today. And that worker may be very happy to work that extra time at the moment because they're committed to your business and they're committed to their career, and they're happy with the money they're actually getting in their pay packet each month. If that relationship goes sour later and that employee leaves you at bad terms, if you've not properly paid them, if you've not got proper time records, you are exposed. Yeah. And as we all know, we live in a litigious world. and a world now where AI is helping employees to understand and enforce their rights more than was the case before. Okay, we've covered all the slides that we've got now. Let's have a look and see if we've got any questions that have popped into the box. Okay. Right. So first one, why are the calculations using 365 days and not 366? Do you use 366 every fourth year? You can't ignore the leap year. Now, our advice normally to people is to say, when you are calculating the level of salary that you are paying and the basic annual hours, work on 52.3 weeks. Now, that means that for 3 years, you are very, very slightly overpaying somebody. But what it means is in the fourth year, then in the fourth year, that's okay, because actually you will be paying them for that 366th day. If you pay on a 52.14 calculation, then you do need to remember once every 4 years, you've got a little bit of extra money that you need to pay to somebody with that. So you don't have to. We tend to work on 52.3 just because it means that people don't have to remember. Okay, next, do I still have to follow this process even if we pay overtime every quarter? Okay, so if a worker is genuinely a salaried worker, they meet those conditions for being a salaried worker, then yes, we can, because we're allowed then to look at their hours over the course of a year. If we're paying overtime at the end of every quarter, that's during the course of the pay year. And that would mean then that those hours are not calculating that towards that cumulative number because we're paying for them. If
okay, sorry. I just wanted to say that you still need to complete your pay reference period check as a minimum, though.
Yeah, because that will identify how much is the overtime. If your worker is an unmeasured worker, then you must pay them in the pay period in which they work the hours, or at the latest by the end of the next pay period. So for an unmeasured worker, quarterly would not work. Okay. How would accrual of lieu hours be regarded instead of overtime? Again, you've got to have a detailed record that shows when the lieu hours were worked, how many there were, when those hours are then taken back as well. And obviously, you would obviously have time records in both the period where the extra hours are worked, and you would then have time records for the period in which the employee is given the time back to support that. The key thing then is you need to have records for it. Yeah. In Chef's Head is not a suitable recording system. Okay. We have remote workers who do not submit timesheets and therefore no records of working hours are kept. Could this be a problem? Yes, absolutely. You need to have records for all of your workers. Now, they may not complete timesheets, but there may be other ways that you can establish their working time. So, for example, the time that they log on to your computer systems. If you've got cloud-based software and people log into the cloud-based software to do their work, there should be a record then of when somebody has done that, and then when they've logged out of the cloud-based software as well. So, as we said, the legislation doesn't say you must keep these type of records. It's more about the standard of records you've got to show. Okay. Shana, do you want to take this one? Can we have in somebody's contract that their pay year will be Jan to December and not linked to their start date?
In terms of the calculations, no.
Yeah. If we're going to have
calculation year will in either way will start from the beginning of the employment, unless obviously you've aligned your annual year calculation year.
But I think we can say to somebody in their contract, your calculation year for minimum wage purposes will run from 1st of Jan to 31st of December, for example. But clearly, it would all be prorated in the first year on that. How do I know if my contracts are salaried or unmeasured? It's very confusing. Okay, so what you're not going to do necessarily is look at your contracts to say, are they unmeasured? What you're going to do is look at your contracts to say, are they salaried? And if the answer is no, then they will be unmeasured. So the things you need to look at, yeah, have we got a fixed and set number of hours in that contract for which the salary is paid? Is the worker entitled to get anything else for those hours apart from their salary? So, for example, if there is a bonus that's there that they're eligible for, what are the conditions of that? Is it all linked to what that worker's done and how well they've done? Or, for example, is some or all of that bonus linked to the EBITDA of the whole business? For example, if it is, that would not be a performance bonus, yeah, because there is some or all of the bonus that's not about how well the individual person has done. Okay. I mean, we can help with that. We can look at contracts and we can advise you as to which they are. Shana and her team in our hospitality payroll team. We also have hospitality HR people specialists as well, who are also very experienced in contracts and can do that too. So that's something that we can help. Do general managers have to clock in and out? No, but if they don't, how are you going to have an accurate record of the hours that they have actually worked? If you have another way of establishing that accurately, then fine. Yeah. But again, the law doesn't say they have to clock in and out, but it does say you need to have a record of their actual hours. Clocking in and clocking out is generally the best way of doing it. Yeah. But the law doesn't say you must do it in that way. Yeah. It just says you have to meet that standard. Okay. Okay. Shana, do you want to take the next couple? Can you make deductions on training costs for minimum wage if it's written into the employment contract?
I would say it depends what the training is for. If it's mandatory training, work related, that would reduce employees' pay for minimum wage. If it's a separate training that is not related maybe to their role or it's for their qualification, I suggest that we need to have a look at the contracts on this basis.
So your role essentially is that training that worker has to have in order to do that job, or is this other types of training and personal development and things like that? Okay. Do directors of the business need to self-document their hours worked as well? Well, the first question is whether or not the director is actually within the scope of the minimum wage. And by directors, we're talking statutory companies house directors here, not just people, say, who are given a title of ops director or things like that. Okay. Formal statutory directors are not automatically within the scope of minimum wage. That means that they can exploit themselves as much as they want. However, if your director also has an employment contract with the business, then they need to be paid the minimum wage. If your director is in receipt of tips and service charge and trunk, then they absolutely need to be within the scope of the minimum wage, because otherwise they can't get that money as well. Again, self-document, absolutely, as long as it's accurate. Yeah. And of course, it may be that the director trusts themselves to accurately record their time and doesn't need anyone else looking over their shoulder as well. I think all I would say with that is just make sure it's realistic. Yeah, on that. If I am a director and I'm hands-on within the business, working, around in all of the sites, or maybe I'm a chef patron, so I'm out in the kitchen, and I self-document my hours as 7 a week, yeah, that's probably not going to fly. So yes, but please be accurate about it. Okay. What if staff are scheduled to work contracted hours but don't record their unpaid break? Okay. You need to record breaks if they are unpaid. Yeah. And I mean, there's a business that I helped a few years ago that had a significant problem with revenue and customs, because in one of their sites, for a period of time, staff weren't being allowed to take the full unpaid break that their contract said they had. The problem was that there were no time records anywhere in the business of breaks. So when staff went off for their break, they didn't clock in and they didn't clock out. They only clocked in when they came in the morning and when they went home at night. That ended up costing that business a very, very large amount of money, because what they couldn't demonstrate is that most of the time, most of the people have been fully given their unpaid break, and therefore they were within minimum wage. So again, get people to clock in and clock out, and make sure they take their breaks. Okay. If somebody is an office worker, 9 till 5:30, if they do extra work in their own time at their own choice, which is unrecorded, how do you manage this? Do you want that one, Shana, or shall I take that one?
Well, we would say obviously that time would be considered as working time. This is something you need to bear in mind. So potentially you may want to have a chat with an employee to say, if you don't want them to work, you just, you can say that they're not allowed to work. So with technology, potentially there are methods of not allowing somebody to work or after 5:30, or a message can pop up on their screen to say that you need to log off. But yeah, if you don't want them to work, you just need to have that conversation with them. But otherwise, any time work will be considered as working time.
Yeah, because it's work for you. Okay, next one. If we have 2 weeks of below 45 hours and 2 weeks, I'm assuming that there's a typo then, it should say over 45 hours. So in the month, it doesn't go over 195 hours. Yeah, that's fine. Because, if somebody works longer hours at certain points and shorter hours at other points, yeah, and when we add that together, it comes to what those basic annual hours are going to be, then we're all right. And that is why there are advantages to having people as salaried. So it does mean we don't always need to pay people for all the hours they work at the time they work them, if we know there are swings and roundabouts here, and this is a busier time of year and they'll work more hours, or a busier time of the month and they'll work more hours. Then there is a correspondingly quieter time of year or month. So if you think of an average, that sometimes during the pay year, they're over, but sometimes they're under. But what that will mean is, by keeping track of the cumulative, they're not exceeding their annual basic hours. And that's the key point. Yeah. So if somebody's got an average of 195 a month and they work more than that, that's not automatically a problem. It's only when the cumulative hours for the pay year exceed the basic annual hours, that's when we have a problem. Okay, what about shift-based contracts? Does it need to specify the hours for the shifts? Can I make a request to everybody? Please, please, please don't do shift pay like that. The problem is, you need to have a record to show that the number of hours in a shift and the average hours that people are working, and that equates to what you're paying them. And the problem is that that's all over the place, because if I work a lunch shift on a Monday, that will be a shorter number of hours than if I work a dinner shift on a Saturday. Yeah. If I work a straight shift, it's going to be different. And revenue and customs, in the past, revenue and customs have formed a view that paying people by the shift is often a cover for we're not actually paying them the minimum wage and we're not recording their hours. You need to have an hours record. And if you're going to say to people, we're paying you by the shift, it needs to be clear what the average number of hours is that that's meant to represent, and that then what people are working is in line with that. Yeah, it's not a get out or an opt out. Okay. We've got a couple of final questions and then we'll bring it to an end. I missed the start of the seminar. Will the recording be available? Yep, it will. So we will send you out to everyone a link in the next day or so of the recording. So yeah, that will be available on that. Right, okay. We've got time for one final one. Oh, Shana, this is one for you. If you go back 6 years, managers would have been on and off furlough. How does that impact? In a very quick furlough, I've tried to erase it completely from my memory, if I'm being really honest. But go on.
Well, with furlough, obviously employees didn't work, so the working time were zero. But as I've already explained, that when employees don't work, you need to default their working hours to their contracted hours, and then still look at the holiday year for individual employee to establish whether any excess hours have been worked prior to furlough.
Thank you for the questions. If there were any that we didn't quite get time for, what we'd say is we'll keep a note of those. We will be reaching out to everyone who's joined us this morning, as I say, with a link to that. Please do then feed that question back to us directly, and we'll come back to you if we didn't have time for it today. And Shana and her team, we are very much here to help you with this. Whether you are already a Moore Kingston Smith or a WMT Trunk Master Services client, or whether you're not, but having listened to this today, you're thinking, nobody's ever told me this before. Can you help me? Please do reach out and please do get in touch. Shana, if we could just move on to the last slide, which is a shameless plug for our next event. So next month, we will be delving into the thorny subject of immigration. So with some of our immigration team that we've got here within Moore Kingston Smith, again, they are experts. So we have both immigration advisors and immigration lawyers here within Moore Kingston Smith. And we can and do support many hospitality businesses, both on the routine day-to-day compliance issues, but also in things like sponsorship licenses, bringing people into the UK from overseas. And given that immigration is an ever-moving feast at the moment, and as we know, the government is making changes regularly to immigration rules, definitely want to join. If you scan the QR code that is on the screen, that will give you a link to register for the webinar. We'd very much look forward to seeing you at that webinar as well. And we will also keep you posted on our other webinars as well. We are having a monthly series of these. So May and June will be announced shortly. Final thing from me is firstly to thank Shana for joining us this morning on that. So thank you, Shana. And finally, thank all of you for taking the time to log on and listen to Shana and myself this morning. I hope you found it useful. I hope you found it informative, if not cheerful. Cheerful was an optional one, and we would very much look forward to speaking to you and helping you navigate this particular maze and make sure that you don't fall the wrong side of it. So thanks everyone for today. Good to see you and see you all soon.
Thank you. Bye.
Bye now.